In this video, traders, we're going to look at the pros and cons of taking a second trade within the same theme. Stick around. Hey guys, warm welcome to you. Right, so the pros and cons of taking a second trade within the same theme. What I mean by this, so let's say you've got a theme, and let's say it's this chart here, right? The theme is buying at this support. This red line here is the support. You've come down, you've got various triggers that are activated when you hit this support. Okay, so the theme is buying at the support level, right? So what are the pros and cons of taking multiple trades around that theme? So in other words, you take one, you get stopped out, you take it again, you get stopped out, that kind of thing. Now, if we look at the pros side of it, the pros are you're taking advantage of an opportunity, right? So the market's come down, and let's just look at perhaps something that we could do here. So let's say we bought at this point here. Hopefully you can see that on the screen. So that might be a dip below. We bought this and we're looking to cut for it to rally up to this point. Let's say that's our target, happens to be our target. It comes back and it stops us out. Let's say we buy this little dip here, and it ends up coming out and stopping us out. Or let's say we buy this kind of, maybe we bought this breakout here, comes up and it stops us out. The point is there's multiple ways that we could perhaps play the trade along here, and let's try not to look at hindsight and go, well, I would have bought it on the third thing. Let's be realistic here and say that, you know, we'd already marked that level as a level to get involved in, and we want to trade around it. Now, ultimately that level works, but the question is, what are the pros and cons of taking multiple trades around that and potentially being stopped out multiple times? So the first one, obviously, the pro is that you're taking advantage of your opportunity. If there's a key level that's of interest to you, then you want to take advantage of that price is at that key level, right? It's given you, the price has given you the level you want. You know, you can work around it. If you get stopped once, that's okay. The argument suggests that you can go again and you're going to be okay. Risk control. I mean, if you're getting stopped out once or twice, it means that you're managing the risk, you're keeping the risk tight. That's the argument for it. It's like, okay, well, the risk is tight, I'm just getting caught out, or maybe it's kind of a rogue candle or something, but the theme is still there, the support is still holding, and then it allows you to have a small tester. So you might have a little nibble and say, well, I'll add some here, and I'll add more as it starts to go up. So, you know, multiple trades around that theme is okay. And the final thing is take advantage of an unusual spike. So in other words, I mean that maybe you get stopped out by a spike to the lows because you've got a stop under here, but then it comes right back up again. So you're back into it. So it allows you to go back into a trade that might just pinged you out just because of a bit of noise and your stop was a little bit too tight. However, let's look at the cons, and I'm slightly on this side. You might have to tell already, but I'm slightly biased to this side. And the main thing is that I feel, before we kind of go into these, and maybe I'll repeat myself a bit here, is that, you know, often you can get caught up in trying to trade this too much, having your stop too tight, and end up giving up more than you would do if you had a wider stop. So it comes down to stop placement, right? It comes down to slightly being out of tune with the market. Because if you're getting stopped constantly at a level, let's say you buy it, it dips through the low, stops you out, you buy it again, it stops you out, all you're doing is locking in loss. And that ultimately could pay for one trade with a wider stop. And if the price action, or if the setup, should I say, doesn't accommodate a wider stop, then really you shouldn't be taking it. You know, we can't force ourselves to say, well, I need a 15 tick stop on this, or if I'm swing trading, you know, maybe it's going to be like a $5 stop, whatever it is. You can't force that onto the trade. If the trade and the noise is kind of in a $10 zone or a 50 tick zone, you can't have such a tight stop. You're going to have it wide. And if you don't accept that, then maybe don't take the trade. So it can, if you're getting stopped out and then you're going again, you're getting stopped out, it can start to frustrate you. You know, I've been there myself. You're trying to get on the end of something, maybe trying to force a break that's not quite there. It starts to annoy you, like, well, you know, and then eventually it goes, and it's a double whammy, right? Because you've been stopped out, let's say 2 or 3 times trying to buy this low, and then it eventually goes, and you're like, oh, and all that does, unfortunately, is reinforce the behavior that next time it happens, you might get stopped out 3 times. You're like, well, I can't stop trading it, trying to get it, because I've got the FOMO now, because I've seen it go multiple times after I've been stopped out. So you're in this horrible situation. So it can really ignite these negative emotions. And obviously, it kind of self-explanatory, guys, it can stop you out multiple times. And that's just going to be more risk than you really should be taking. If you're getting stopped out, you know, you're buying this, you're chasing it because you think, oh, I missed it, and you get stopped and it comes back down again, and it's testing the low, you think, oh, that's a great level, then it goes further and stops you out, and you're trying to manage the risk too much by keeping it tight. You're just going to lose too much money on one theme. And it causes you to exert too much energy on a non-profitable pattern. You know, you could say it's a profitable pattern because it's a level I want, but ultimately if it's not doing what you want and it's messing around at it, it's flicking through, it's coming back up, it's faking out, it's coming back, it's not profitable. It's there to extract as much money as possible from people who, like you or I've been there myself, so I'm not kind of blaming anybody or pointing fingers here. We've all been there trying to extract, you know, profit from it, when in reality it's extracting profit from us. It's spiking up, causing us to dive in, think it's going to go down. You know, these things happen for a reason, guys. It's sucking liquidity out of the market, testing for liquidity, stopping people, pulling back out. You know, this is just the nature of the market. And it can cause you to be too focused on one theme. You don't see the bigger picture. You can get caught up in trying to buy this level, so keen trying to buy this level, or I'm trying to buy a breakout, whatever it may be. You don't see the bigger picture. And the bigger picture might be, listen, wait for this to resolve. Wait for this to get back up above this high and take a little pullback here for a gap fill or whatever it may be. That might be the easiest kind of 50 tick trade or $10 trade if it's a swing trade out of the lot. There's many examples, chart examples, guys, where we've seen this kind of messy stuff at lows. And yeah, if you managed to get in this kind of here and you sat with it, you sat through all the chop on the pain, you're obviously up much, much more. But you know, if it's a detriment of potentially giving back stop after stop after stop after stop and frustrating and annoying you because you're trying to get that low and it keeps stopping you out, then leave it and look for the bigger picture. The bigger picture might be, hey, well, actually, what is the next big move that comes out of this little mini congestion? Is it a reversal? Maybe it's a continuation. You know, maybe it's a continuation, flushes, comes back up. Maybe that's a better trade. There's always going to be a better theme after it. So you can become so laser focused on one theme that you forget there's going to be another one afterwards. And it might even be, if you're day trading this, it might be in the afternoon. If you're swing trading it, it might be even the next couple of days. So there's always going to be a second opportunity, and you can get caught up so tightly focused trying to catch this, and so kind of a revenge, and so kind of focused on trying to get that it ends up being detrimental to you. But you know, looking at both sides of it, I'm strictly on this side. I'm very cautious about taking multiple entries, just purely because of my own experience, guys. It doesn't really serve me. But you know, just kind of looking at things from a neutral perspective here, then you know, you can, if you get it right and if you're good at it and if you can kind of be disciplined with it, then you can kind of work around the level. You can kind of go in a couple of times, maybe 2's the maximum for you. You've got some restriction on it. You're not doing it loads, but you're there and you're kind of, okay, I'll have 2 nibbles at it and that's it. And that's the kind of the sweet spot, I think, is that you give yourself maybe a couple of chances at a level, but don't keep going again and again and again and again and again before you know it, you've lost kind of 5 times what you expected and you're still nowhere better and you're in a worse emotional place. So just be cautious of that. I know that it catches out a lot of day traders and swing traders too, trying to trade around one theme. The theme's not as strong as you think it is. It ends up doing a bit of damage to your account and to your confidence. All right, guys, take care. See you in the next one. Bye-bye.